Everybody, thanks for getting on this Facebook, YouTube. Thank you. Right now, I want to talk about something I see a lot. So if you don't know, my name is Jason Matthews. I'm President and CEO of Matthews Financial Insurance Solutions, where we specialize in working with people who come across a windfall of money, either through an inheritance, settlement, switch jobs, or their business have grown and blew up substantially. And one thing we come across is a lot of people who are younger who get term life insurance and say that's all I need because by a certain age, I don't need life insurance, right? Or we see a lot of people in their 60, 65, 70, 80 years old and say, I need life insurance. My life insurance blows up. My term policy expired. I'm still living. So I want to talk to you guys about different reasons why you might still need life insurance after the age of 65 in your golden years when you think the kids out the house, the mortgage is paid for, and then you don't need life insurance. So let's really dig into this. First and foremost is loss of income. So if you're married, one person dies, what happens is, and you're over the age of 65, one thing is you lose one Social Security check. You only get the higher of your two Social Security checks. So you lose one person's Social Security check. It could also hurt because you might lose that person's pension. So you might still need life insurance for loss of income of your spouse, and you have to see how it affects you and so forth. Number two is paying off debt. So many people like, when I turn 65, I want to have my debt pay off. But the actuality is most people over 65 do not have their debts paid off. They still have student loans. They still have a mortgage payment. They have so much other debt. So you still need to get the life insurance because you want your debt to pay off and you don't want your loved ones responsible for your debt. Third thing, and probably the most biggest one we probably see is it covers burial and final expenses. I have so many people older who want to get $100,000, $200,000, $300,000, $400,000 policy, but unfortunately it's so damn expensive. So what they do, they settle for a burial or final expense policy, not just because also the cost, but also their health. As we get healthy, older, oftentimes our health deteriorate. We start having different issues, and the only insurance we can get is these final expense policies. And usually the most it will cover us is for about $50,000 or less. Fourth one is give to our grandchildren, church, or nonprofit, and back to our community. One of the best ways and the cheapest ways to give back is using trading pennies for dollars, and that's the power of life insurance. So with that being said, is we can if we have $10,000 in the bank or $50,000 in the bank, we can instantly turn that $50,000 to $150,000, $200,000 like that, and we can give that to our grandchild, maybe our church because we love our church so much, or to a charity that we're really about. Now, here's a bonus one that's not on the list. The last one is taxes. What we fail to realize is this. If we have 401k plans, we have our IRAs, when we pass away, we have to pay taxes on it. And the cheapest way to pay Uncle Sam is not through our own money, but using life insurance to pay for those taxes. It's the cheapest way to do it. So if you have an IRA, you have a life insurance, or if you have a huge estate, which is tons of money you have to pay estate taxes, the cheapest way, what the wealthy do is that you buy life insurance to pay for those taxes. Now, if you feel like this video is helpful, go ahead, email us about it. Let us know what your thoughts. Talk to you later.